Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and the closing trades aren't looking very pretty, at least in contrast with how we started off the day. We started with a fresh record high level. Everything was looking quite hunky-dory till an hour ago, and that is when the slips started coming in the market. Nifty is over 120 points off the highest point of the trading session. My guess is now it's actually extended to almost 150 points. And the Bank Nifty too is dragging its feet along. There's a sharp drop of almost 250 to 300 points on that one. 6 days on the trot, we had seen that Nifty was gaining. Today, that is likely to be broken. If the current trend is anything to go by, we're likely to close in the red, which will mean that the 6-day gaining streak will actually take a break. Even in terms of sectors, I think what's actually standing out is real estate pack. That's managed to hold on to the green a bit. So names like DLF, Sobha, even Prestige Estate for that matter, are holding up in the green a bit. From the frontline index, it's SBI as well as ICICI Bank which are managing to buck the trend. They're contributing just around 20 points on the upside, but it's HDFC Bank which is reversing its course from yesterday. So that stock is down 1%, adding 16 points to the downside. And Infosys, that's the other stock which is actually putting a lot of pressure on the Nifty. That stock is adding almost 31 points to the cut that we are seeing at the index right now. But quickly moving on to the stocks and news and talking about some of these big buzzes as well. ABB is the stock in focus. We saw that earnings were a big surprise coming in. That order inflow of over 30% plus the margin beat is something that was liked by the street. Stock holding up with a gain of around 10%. Good commentary in the con call as well. You also have Z Entertainment in focus, that after the big spike yesterday, seeing a reversal after the company clarified that they're not in any deal talks and that entire accounting issue that SEBI is investigating is still underway. And lastly, wanted to highlight what's happening with some of the other companies as well in terms of how the moves have really panned out today. So the names will come up for you on the screen, but Nifty for now is seeing a drop below the mark of 22,100. Kunal is with us in the studio, so let's take it across to him. Kunal, this sharp drop in the last 1 hour, how are you looking at that both in terms of Nifty and Bank Nifty?
Yeah, it's a sudden correction for the indices, but doesn't this 100-point move for the Nifty on a net basis doesn't change the course of this 500, 600-point rally which we've already seen for the index, because right now the support for the Nifty is at 21,700, 750 mark, which was the earlier resistance for the index, and it's post that where we've seen the momentum accelerate. The only factor which is actually concerning the markets right now, because ideally in a rising market or in a market which is going through an uptrend, the likes of what we've seen over the last 6-7 days, the VIX should have ideally fallen down to maybe 12.5, 13 odd levels, but that's still at 16 approximately, the India VIX. That generally is a concerning point, because that indicates that we may expect this volatility to continue on an intraday basis, but if the net direction for the index still remains on the upside, we would maintain a long position. So 21,700, 750 as a support, keeping that as a support would maintain the long stance on the indices, but it's just that the VIX is leading towards the rise in the India VIX is one of the only major reasons why you're seeing this intraday bout of volatility.
Okay, so the India VIX continues to be a bit heavy, and that's the reason you are seeing these bouts of volatility as well. Just marking a few more stocks, you have Ahluwalia Contracts, which is up 6%. Mrs. Bector's has seen quite a bit of spike as well, 6% higher. Campus Activewear, wherein we saw that large sale happening today, is also fairly active. At one point of time, it was about 10%. Right now, it's still holding on to gains of 4%. MRPL is the other one, which is actually down 6%. But ABB, that's the biggest stock to watch out for, up around 9 to 10%. Let's listen in what the management had to say about their earnings. I had the conversation with the management just a little while ago.
So I think the last quarter, which is the Q4 of 2023, did include a large order from the railways segment, which was basically one-off in the times. And I think it has got both systems as well as services in that, and that takes time for execution. So I think while we say this, we really looked at the base orders, which is the bread and butter for the organization, and it also seemed to grow, if not 35%, definitely a good strong double-digit growth. So that's I mean the culmination of these two, I think, probably led to the order growth in the last quarter.
Just a follow-up there before I take it across. Elections are impending. Do you expect certain slowdown? Has that been the trend historically, that there might be a bit of slowdown in a couple of quarters just around elections?
I think the nature of business we do, we have 18 business divisions operating in 23 market segment, and all those market segment has a kind of a duration for capex formation and spend. So from my point of view, I don't particularly see any direct impact on us, but there could be a marginal impact on the fringes of some market segments, but not at the core of it.
Okay, so not at the core of it, but you talked about how you have a diversified palette in terms of the capabilities that you bring on to the clients. But is there a specific industry or specific vertical which you think is showing more green shoots versus others?
We do have certain market segments which are tracking very well, and I think we last time when we spoke, we also mentioned it to you. And there are certain market segments which have started working even stronger than before. Data center, for example, is a very solid story. Renewables, again, is another area which is tracking well. Railways and metro is contributing and also has a very good and solid pipeline. And power distribution, be it in the cities, in the industrial infrastructure, and also in the infrastructure in general, in the buildings and the high-grade buildings, that is also expanding for us. And apart from that, of course, we have multiple other market segments which are quite steady for the order intake for us. And our traditional segment, which we used to call as core market segment, we are also seeing good traction, which is coming in that, whether it is steel, cement, and other related industry. And then there are certain specific themes which are beyond the industry verticals. It is about energy efficiency, robotics automation to gain more productivity and the energy efficiency in the operations, and also looking for building automation, which really positively contributes into energy consumption of the tall rise building. And there we are seeing good traction as well. And of course, some new age technologies on the digital side being deployed by the process industry. That's another area wherein we are seeing some good traction.
Okay, so a lot of verticals actually firing away, whether it's data centers, renewables, railways, and the entire energy efficiency that you talked about. But exports as a segment has been a bit muted. I know you're focusing more on domestic because just the demand here is enough. But just wanted to get a sense from you from an industry perspective. When do you see a pickup in exports going forward? Do you think it's largely related to Red Sea, or there are structural issues at play here?
Well, it depends how we read the numbers. If I look into net increase on our exports, we have grown by 15%. But since the domestic growth is so strong, so in export, in percentage terms, from 12%, they look 10%. So that doesn't mean it hasn't grown in the absolute term. And being a multinational corporation, which is domesticated for a very long period of time, we are manufacturing in this country for the last 75 years. We are deeply engaged into domestic market, and that's our core focus. And since our operations are now very productive, automated, and also very kind of well diversified, so our global teams are making use of Indian operations to serve other markets. But our prime focus remains in domestic market, and we continue to serve our global businesses as requested by them.
Fair enough. The demand here is so strong that you don't have to worry about what's happening across the globe until and unless that demands come to you directly. But Sridhar, just wanted to get a sense from you regarding the margin expansion story as well. It's played out beautifully in this quarter, and I remember hearing it on the con call that you believe there are further levers available for that. I was a bit surprised by that because the commodity prices have again started inching up. Are you able to squeeze out that much efficiencies and command that better pricing that there would be more upside on margins?
So Anusha, I think thank you for this question. So first of all, I think what is going to drive the margins going forward is a good mix of orders what we have, right? So we have 8,400 crores of backlogs, and you have 15% of that is from large orders, and the balance is something which is going to be executed in the next few quarters to come up with. So now, having said that, with the revenue visibility which we have and the orders which we will book and bill it out in the in 2024, I think could be an interesting play for us. So now with this particular momentum, what we have, I think our ability to convert them into profits at the bottom at the end of the year, I think remain to be pretty much very solid on the ground, because one is a product mix, The next is around how we leverage on the capacities what we have, and of course the localization, which we are always talking about, would definitely lead to the margin growth as what we see, right? But having said that, we will not be able to pass on the so-called the commodity impacts at what we used to do earlier. So there will be a bit of a stabilization which will happen on that, and therefore I think in the analyst call which we said is that we would like to continue the momentum as what we have at this point of time and make sure that we are on the double-digit corridor on a credible way.
Okay, we'll do with that double-digit number given the kind of context we have of the global headwinds. But how's the competitive intensity in this sector as well? Because there are a lot of these smaller niche players which are also coming up. Of course, they can't be in those large order categories. They can't qualify for that, which you have been doing rather well. But overall, how's the competition in the sector, or is it more of the same?
No, I think we don't pay that much attention to competition because what we do is we pay attention to our customers and the market segments wherein we want to grow. And that's where exactly you get the understanding of the real market and how we should adjust our portfolio, how should we do the localization, and really come down to the the price expectations of the market so that we can gain volume. So that has been what our focus in past, and that's how we'll focus in future.
So that's the management of ABB India in conversation with Anisha. Very solid commentary coming in to the extent that the entire market has gone weak in the knees right now, but ABB India stock is trading at sessions high. Especially what caught my attention was the part on data centers and railway segment being strong. But Anisha is right here. Anisha, what applies to ABB would apply to others in the space as well to a large extent. Who are the peers and what is the valuation which you're looking like? Any thoughts?
So ABB, Siemens, these are the direct competitors that you have, and both have the capabilities of servicing that. So that should be something which is interchangeable. I think valuation wise both are between 65 to 70. I wouldn't have the exact number as to which is right now 65 and which is 70. But usually these are the valuations these stock trade at. But what I do remember is at least earnings wise, ABB has been able to do better over the last few quarters versus Siemens. Siemens has had very volatile moves. One quarter it's a good number, one quarter it's a bit weak. But I think the commentary regarding data centers is something which is very confident in their body language as well, right? They said this is a story which has just started playing out, and you know what's coming together is, Ajay, different people servicing different ways of this data center. The commentary remains the same, that the business is coming in from there. Exactly.
Some of the data center setup, players directly, HBL
the people
Electric.
who are cooling it are saying that there's demand. The people who are probably servicing with respect to the power efficiencies are saying that. The people who are building it are saying that. And we are seeing investments coming in from everyone. So clearly there's a success story there.
The other point which I want to highlight from Anisha's conversation is, apart from the business tailwind which the management have indicated towards, I wouldn't be surprised if the entire pack starts getting active in the next few days, because Kunal is right here, this entire ABB, Siemens, Cummins to a certain extent, because of being on the higher end of the valuation range, they went into a big sideways consolidation, if you remember. They were the leaders of capital goods rally, right? Can you pull up a very long-term chart of ABB, Siemens? Not today, long-term chart. Is this move today on the commentary which she had and on the con call, is it coming out of that sideways consolidation?
So, this has been these are stocks within the sector which have been class outperformers. When you look at the 5-year, 10-year scale for these stocks, and these are not the traditional high beta stocks as such, where you see a trending move and these stocks they rally up higher.
No, for example, Siemens, right? This is the 4-year chart which my producers fired.
Correct.
It went up. Then it was a very good fall also, which has
That's
happened.
exactly the point. So you see the chart, you see the intermittent phases of pause in between, and these are not pauses for 1 month, 2 months. These are for 6-7 months, where these stocks rest. They take a lot of time to consolidate. But the moment these stocks move up higher, there is a gain of another 10, 15, 20%, depending on the time scale you're looking out for. So I think today's move is a indication of such a kind of a shift of range for many of these stocks, including ABB.
What about Cummins?
So again, very similar kind of a chart. I think it's now at 2,600 somewhere. approximately. Again, a very similar kind of a chart. You look at the intermittent phase of pause in between. It says that the last 1 month rally for these stocks have been a bit steeper than the traditional, slow gradual rally for these names. So maybe the ongoing or the forthcoming consolidation could be a bit more prolonged. So it's always better to try and buy these stocks when they consolidate, and if you can have a time band of maybe 3 months to try and time the consolidation, all the more better.
Excellent. So that's a 360-degree analysis of ABB triggered move, and of course other stocks which you should keep an eye out for. But by the way, Anisha, as you were talking, was I talking to you that the rally yesterday was very narrow? Only two stocks, ICICI and HDFC.
And
ICICI
yeah.
Bank Nifty and Nifty. Yesterday, two small cap, mid cap ended at day's low. And narrow rallies actually don't last long. Today also, if you look at it, the biggest falls are in the broader market. So this narrative that broader markets are expensive and are above their mean valuation last 6 months, but at least now it's playing out.
Okay, yes, it's playing out. So we are watching out for that. But overall, the market is coming under pressure now, threatening to go below the mark of 22,000. But we have exclusives raining for you here right here on ET Now. And this one is another one coming in Eureka Forbes. It's likely to sell its stake. The global parent, that is, I think, is looking at selling some part of the stake. Actually, let me do one thing. Let me take it across to Cheryl, who will come by and give us more details on the story. Cheryl, who exactly is the seller? Why are they selling out of Eureka Forbes?
Well, what sources are telling us, Anisha, is the fact that India Discovery Fund is likely to sell stake in Eureka Forbes via block deal. Remember that India Discovery Fund actually holds about 7.42% stake in Eureka Forbes. This is as per the BSE shareholding, and we are expecting the block deal size to be approximately 700 to 750 odd crore rupees. What we're also picking up from sources is that large domestic investors have already are likely to actually go ahead and pick up that stake via the block deal, that's Eureka Forbes stake, and IIFL is likely the banker to the deal. Adding to that, what sources have also told us that the discussions between the interested parties as well as the bankers have already begun. So in days to come, we are likely to see that block deal take place in Eureka Forbes. It will be India Discovery Fund that will be offloading its stake via the block deal, and they currently hold 7.42% stake. So the block deal size could likely be between the range of about 700 to 750 odd crore rupees.
Eureka Forbes for you. By the way, if you look at the latest results of Eureka Forbes, there was a sharp improvement in operations. And but of course, this is the valuation always is an issue till numbers meaningfully improve on Eureka. Bulk of the street says valuations are high and not ready to touch it. It'll be interesting how this block gets the response. But Rahul Shah from Motilal Oswal is waiting patiently with his list of multi-bagger ideas, which he's always recommending his big HNI clients. But Rahul, we'll come back to you and Nuresh in 2 minutes after these messages. All right, let's see the discussion on markets forward with Rahul Shah also joining in. Rahul, there's a nice broad-based weakness which appears on the screen. Are you recommending your clients to be buyers of this fall, or last 2-3 days have you been taking some chips off the table for them?
Hi, good afternoon. I think obviously we are in the bull markets, and I think we will see some kind of selling. This like keep coming, but I think I've been advising them to keep buying and use this fall as an opportunity. So I think if you look at it after the healthy corporate earnings season getting over, I think we've seen good round of all players in the entire Nifty universe. So I think large cap should be continued. Mid cap select pockets, I think we have been booking profits at select levels, and in our large caps, I think we are overweight, and I think we're spreading our portfolio more overweight on the large caps. So the same with the clients have also been doing it. So
Rahul,
reducing
any
a little
thoughts
bit
on
exposure from the mid caps after a spectacular run up and shifting towards to a large cap.
Rahul, any thoughts on Swan Energy, that stock, that LNG company which is now foraying into defense? Any thoughts over there? It's down 5% after a very successful fundraise. Some profit taking coming in because the price is 670. Any thoughts there? Have you looked at this name?
So we don't cover, and so I don't not able to recommend anything on the Swan Energy.
Sure. But Jana Small Finance Bank, have you looked at that one? Jana Small Finance? Or any other mid-sized bank which you like? Rahul?
Hello? Yeah, your audio is not clear.
Rahul, have you looked at Jana Small Finance right ahead of the results tomorrow? The stock is gaining 5%, the recent IPO, or any other
No,
mid-sized
no.
bank?
So I think Jana also we've not been looked at. We are just invested plans only for the listing gains, but nothing great in near-term perspective. But yes, but we've been recommending on the PSU banks for quite some time, and that too also on the smaller banks, and not being the large caps. Large caps always obviously State Bank has done fantastically well. We continue to own, but I think mid caps like PNB, Union Bank, Bank of Baroda, Jammu Kashmir Bank. So all these 3-4 banks we are very overweight on, and I feel that I think still the next 1 year, most of the stocks have almost doubled in last 1 year or maybe more in some cases like Jammu Kashmir Bank and all. But I think I still believe there'll still more upside if for the next 15 to 18 months. There is a fair chance of most of the banks going to around 50% from here onwards also.
A lot of these, block deals which keep on happening these days, Rahul, any of the names that you have participated in at the fund level, whether it's, let's say, Minda or even Devyani for that matter, Whirlpool happened, anything that you guys have added positions into?
I don't think so that we've participated in any of these 3 names.
Okay, fair enough. What's the view on ABB at this point of time, Rahul?
So I think spectacular results, great con call. I think where the management has spoken about, and I think where we see the order book, and obviously also from the places where they were not seeing the order books in terms of the businesses, they started getting it. So I think the stock will continue to do well, and I think obviously the pockets where they've been seeing strong order inflows, obviously from the sectors which are firing. I think one is real estate sector, and then obviously from metals and also on and on. Data center has been a good for them as well. So I think numbers were good. Obviously, we are seeing the reflection in terms of the prices as well. So and this remains our top pick as well in the capital goods in spite of this run up in the stock. So I think very few select names are there in the cap goods side that one can have in the portfolio. So ABB remains our top bet, followed by L&T.
Point taken. Since you're talking about real estate, let me bring Naresh into the conversation and ask his view about the real estate pack, if there's anything that he likes really. Because Raymond is up 6%, Sobha is up, a lot of other companies like DLF, etc. are showing good move. Naresh, what's the recommendation from the real estate pack?
So out of these names, a small cap which looks interesting is Suntec Realty. If you look at it, what has happened with the rest of the real estate names, you've seen everyone move up, whether it is a DLF or a Ajmera Realty on the smaller side, put Purvankara. In that sense, Suntec has gone nowhere. There have been a lot of block deals, a lot of change of hands over the last 1 month or so. The stock today is at 480, 490 levels. The high last made was around 550 to 580 levels back in 2022. And the highs in 2018-19 were closer to 500 odd levels. So the stock has gone nowhere for the last 5 years. Looks like a major breakout in the making once it sustains above 500, 510. It would be a huge cup and handle breakout, and the stock could make a much larger move. So the structure is positive. It's at the start of the rally. So this could be one of the better risk-reward bets in the real estate pack right now.
Naresh, Piramal Enterprises is also kind of waking up, wanting to participate in the entire NBFC rally. What are the levels to watch out for there?
So the stock gave a breakout today above the 930.35 mark, which was the recent high, as well as a downward channel breakout was done. The stock has pulled back a little because the stock has gone into almost 105% OI. So the stock should go into band tomorrow, and that's the reason we are seeing some bit of a build, say a bit of a little downtick. But at 915, 920, the stock looks like a good entry point if one has a view for the next 1 month.
Point taken. In fact, so that's the view coming in Piramal Enterprises. What we'll do is we'll take a short break, but don't go anywhere. The market is coming under a lot of pressure. We'll decode what's happening and what could be those buying opportunities emerging on the other side of this very short break. But on that note, Rahul, we'll let you go. Thanks so much for being with us today.
Good law, but devil is in the detail, devil is in execution. Therefore, speed of resolution, should a problem happen, is a part of it. Because we at times are not able to manage the speed of resolution, we try and stop a situation where no accidents should happen in the first place. I think the two are very different in terms of how we look at it.
I mean, speed of resolution and the speed of way things work in the entire judicial system is probably the number one challenge, and maybe we can come back to that a little later. But when it comes to the financial sector, just looking at the health of the sector today, I mean, obviously it's much better than what it was a few years ago. How healthy is it? I mean, NPAs look much better.
I think certainly
lending has
better. And I
started.
want to move forward to say that another major transformation is underway in the Indian financial sector. And I call it as the transformation of a nation of savers is becoming a nation of investors. So you're seeing the whole intermediation process significantly and steadily move away from a traditional model.
Savers turning nation of investors. It's a good problem to have, Avnish, right? There are a bunch of direct beneficiaries of this kind of a transformation into our country. Some 4-5 AMC listed stocks, one of the advisory stocks, which is a distributor of mutual funds, some platform stock, exchange, CDSL, KFIN put together. Any part of this entire basket which is a direct beneficiary of this transformation which you like? Amnish?
So I think we'll take that question in a bit, but since we have Amnish with us and if the line is clear, I think we can probably discuss the pain stocks as well with him, because that was the space which was fairly active. And of course, Grasim is most likely to launch its much anticipated, factory tomorrow at Panipat, and then the product will be out really soon as well. Amnish, if I can bring you in the discussion for that paints. This is something which has been known. It's not completely a fresh news, right? And the incumbents have learned how to deal with it. What kind of impact are you expecting with this launch finally happening, and what are you waiting to hear from the management tomorrow?
Okay, see, there have been, paints has been a sector where the entry of new players is not happening for the first time. Over the years, we have seen many players, many MNC entering the sector, but somehow the incumbents have been able to hold on to their grounds. However, I think the entry of Grasim is different from the earlier, you can say, launches by MNCs or other players, because the kind of investment which Grasim is indicating over the next 5 years or so, which amounts to say 10,000, which around say 6,000 crores of capex, is not something which any of the earlier entrants has committed to the sector. So that is one. The secondly, paints as a product have got a lot of stickiness, and our sense is that it will depend a lot on how Grasim approaches, which market segments they want to cater to, and how they make their products available and they approach the distribution, because distribution in paints is a very, very key factor to watch out for.
Okay, one quick follow-up, then we'll go to Ajay Bagga, who's also joining us now to talk about fundamentals of the market. Amnish, I want to, there's one section of the market who believe that the valuations which Asian Paints and Berger have actually enjoyed for a very long time because of having large market share, great distribution, may actually shrink going forward as more players start and the existing and incremental market share gets divided in more number of players. Do you see that possibility or not quite? It won't be easy for Grasims and others of the world to come and grab market share here.
You see, as far as market share is concerned, I won't write off Grasim because the kind of investments they are making into, and they have got already a distribution reach because they have been selling cement from Ultratech, and the group has also got Birla White Putty, which is being sold. So they have got some reach as far as your distribution is concerned. Now, market share, I think B2B could be one segment where you directly approach, say, and bid for government contracts, or you can say large real estate builders, etc., which I believe Grasim will try to cater to. The second factor is that initial market share gains by any new player by using the distribution, by advertising up to say maybe 2-3% is very easy. So incremental sustainability will be a key factor to watch out for. And so I would say that as it is happening towards, you can say, the beginning of March, so we have got one full year to watch out for next year. And so how Grasim shapes up over the next 6 months, then ahead of festival season, will be a key factor. Now, coming back to your second question on valuation, I believe Asian Paints or Berger, few months back, they were like your most expensive paint stocks globally. Now, it has been because of the resilient performance they have been showing and the growth in the Indian market, because paints have been a very steady growth segment. But given the current context where a large your player is making an entry, there is a likelihood that you see Asian Paints and Berger, they won't, you can say, die out, or they will not lose massive amount of market share. But realignment of some advertising, realignment in some of the incentives to the distributors in some credit period, and some other, you can say, small things of that sort can't be ruled out. And if that happens, definitely there could be some breaks on the, I would say, margins or the earning trajectory in the near term. So I think to some extent markets have already started factoring in that, because our post results, Asian Paints has corrected by, I think, approximately 8 to 10%.
True.
So I don't rule out that these stocks may weaken further or become range bound, at least in the near to medium term, till the time markets get more clarity on the impact of grazing on these companies.
Okay, so these stocks might be a bit weak or range bound in near term. That's the word coming in from Amnish. Thanks so much for joining us with that quick take on the paint sector. But Mr. Ajay Bagga has been waiting by patiently. Mr. Bagga, what's happening to the markets? We reached fresh high levels and then this sudden bound of profit booking comes in. Do you think we are close to the top for the year, or at least for the first half of the year?
Difficult to say that, but I think the big trend is that foreign investors have been selling as a cohort. Within that, there are different types of investors, of course, but FI selling is one characteristic of this market. Second, emerging markets have been hit by the Chinese market underperformance. So, as the Chinese market hopefully bottoms out, and more flows start wending their way towards the emerging markets, we will also see a reversal of this trade. So that's the first thing. Second is that our valuations were never cheap. Valuations are still a bit on the higher side. And so, despite getting a bigger share in the global indices, we are not getting that kind of inflows yet because there is a wait and watch with the foreign investors. And third is the big event coming up, the national elections. Of course, the market consensus is political stability, political continuity, but still there is a segment of investors who would like to wait and watch. So that's the big theme, 30,000 feet and more granular. I think banks have underperformed and they're a big chunk of our market. That has led to some underperformance. And IT. IT still has a question mark, and that's the second biggest segment. So that's hurting our market's upward journey. But I don't think we have reached the top for this year. We'll see better levels again in this market. It's more a consolidation phase that we are going through.
Are you of that camp, the camp which you're referring to, who would like to participate more wholeheartedly at lower levels and would wait it out a bit for froth to get clean a little bit? Are you also from that camp?
No, I'm fully invested, Ajay, because you can't ever time it
Right.
To the T. So I would say that it's foolhardy waiting for that froth to clear and all those things, because you have a structural story going for India. You have an India macro which is booming and which will continue to do very well. So the time is to put money into India, but the foreign investors are of different segments and they have different issues on their portfolios, which are leading to some outflows. The good news is that the domestics have stepped up, and as Uday Kotak's clip you were playing, and that's something Ajay he used to say even in the 90s, that we are a nation of savers and not investors. Now he's changed to saying that savers are getting converted into investors, and that's your SIPs, that's your insurance flows, that's your provident fund and pension flows, which are a huge conglomeration of domestic money, which is holding up these markets, and that will change the hue of this market to be very little dependent on the foreign flows. I think that's the big change that's coming over the next 3 years, where domestic institutions will own a broader segment, a broader proportion of the market, and the FI outflows will not have that big an influence on the market.
Specific question to you, because you're somebody who look at the global macros as well. What has happened is that one of the under-owned space of the market, which has recently last 6-8 months started doing very well, is pharmas, and understandably so. Look at Dr. Reddy's guidance for last 2 quarters and commentary, and Lupin as well. So these stocks moved up. Sun Pharma almost 1600 now. So the participation has happened in them, and the guidance for few quarters is strong. Is it prudent to take some money off here? Because another section of the market says if you don't book profit now and market starts believing Trump coming back with Atmanirbharta for US coming in, because Trump is more about make in America, all of that. The pharma lobby the pharma exporters could get it on the chin. So would you book profit on that point or no?
There is always noise in the election year on the pharma costs. And if you look at the medical costs of the US as a nation at about $850 billion, it's the highest in the world. Maybe England hospitalization might be more expensive, or European hospitalization, but they have a very strong welfare state where everybody gets covered. But Big Pharma is a big lobby, and it's a juicy lobby to attack for all politicians. But on the ground, very little gets done. I don't see a very big threat from that. But yes, sentiment will definitely get impacted over the next 6 months as the US elections roll out. And there will be a lot of talk about this. In fact, Big Pharma is challenging the prescription of generics by US doctors. So a lot of suits are on that as well, which directly impacts our generic players. But it's a very vast market. And the good news is that over the last 3-4 years, the US revenues got so depressed and the margins have got so compressed that the pharma generic players started looking quite attractive. So it is a fundamental shift after a lot of time that the pharma players are getting back. There will be the FDA focus. They don't like the fact that India has so many pharma alternatives available at a much cheaper cost. And unfortunately, Indian companies don't invest in the compliances. If you read the 483s, Ajay, you will be aghast that data has been changed. And now there is so much software available which can track the archives down to the beginning of that data. And still, I was reading a recent 483. It said that microbiological precautions were not taken. You're making medicines, for God's sake, and you are risking contamination in that. Works in third world countries will not work in an American milieu. That is the only downside, and you don't know when the next 483 will hit you.
Sure.
That's why this will not grow into a very big segment because of the hanging sword of compliance.
Yeah, hopefully they get their house in order and at least manage to keep the basics in terms of the hygiene given the industry that they're in. But I wanted to shift the conversation away from pharma into the oil marketing companies, because BPCL, HPCL, IOCL, all of these stocks have lost quite a bit from the highs of the day and trading close to the lowest point. Naresh, what's the view on these stocks? Is this dip a buying opportunity?
So ideally, one would need a correction of 10-15% and then start looking at it. So if you look at BPCL, the stock had made a high around 680, 690. We are just getting closer to a 10% correction. The last swing low for the stock is closer to 580. So that's where one wants to keep a stop loss. So closer to 600, 605. That is where BPCL could be a fresh trade. But overall, time for some pause in names which have gone up 100% over the last 4 months in the PSC segment, because we cannot continue on this speed forever. So OMCs and a lot of oil and gas names correcting 15% top from the top would be pretty normal, and that's the price point you would want to again look at it.
Zee Entertainment has actually increased its fall. It's now seeing a cut of almost 15%. And the other one that I'm watching out for is, of course, on the gaining side, Mrs. Bector's Food, where the volume has picked up. Kunal, on the charts, track these two names?
Yeah, of course. For Zee Entertainment, I think it's a no trade stock. The stock has this tendency of getting to the F&O band. The trends are a lot, in fact, very erratic for Zee Entertainment, and the swing is more than 30-40% at one point of time. So it's very futile as an exercise to try and look out for panic zones to try and exit the stock, or look to create fresh longs. In fact, yesterday, if I'm not wrong, the stock had given a breakout about 200 levels on an intraday basis, failed to sustain, and today the stock is back again to its previous swing lows, closer to the 160-65 mark for Zee Entertainment. So it's a stock which we clearly would suggest to avoid. The other stock which you mentioned, Bector Foods, that's a classical chart in the making, because I think 3 days back, or last 1 week, the stock had fallen down some 20% from 1200 to 1020 approximately. Today is more of a recovery move for Bector Foods. So ideally we look out for 50% retracement for such kind of stocks, and that retracement level for Bector Foods is around the 1140 mark. So I'll wait out for maybe another 3% rally for the stock. If it breaks past about 1140 levels, that's a very strong confirmation that a bottom is in place, and we could be looking at the stock hitting back about the 1240-1250 mark pretty soon.
Okay, let's see whether that happens or not. But just to that point on Zee Entertainment, Kunal says it's in a no-trade zone. But Mr. Pagga, what's your view on it? Because, Paytm wasn't a similar story, but that stock had also seen quite a bit of dropping. But at some level, the buying emerged. And if you look at the last 5 trading session or 4 trading session, that stock has been locked on upper circuit consistently with 100% delivery thereabouts. What's your view on Paytm, Zee Entertainment, these volatile names?
See, when you have a fantastic market like India with so many growth stories and good clean stories, I would say avoid the compliance stories. And wherever there's a whiff of any governance issue, it might not be worthwhile. On Paytm, the fact is that you have much more buyers than there are sellers. So that is a reality, and I can't explain that reality. I don't, talk about individual stocks. I won't say whether to buy or sell, but clearly, wherever there is a compliance whiff also, I think you are best served by sticking to the, straight and narrow. You want to take that kind of risk on small caps, that's okay. On the 30 stock portfolio, you say, okay, 2 or 5% I will risk on a couple of small cap stocks. But in a center of plate or large companies to see governance issues or compliance issues, that becomes a very big red flag. And especially in India, when you have so many alternatives, why go down that route? Let the penny pickers stand before the oncoming trains and try to pick up the pennies. You should not join them.
On that note, Mr. Bagga, we let you go. Thanks so much for making time and speaking with us. Let me take it across to my colleague Sharad as well. He's joining us with the latest khabar in the dealing room. Sharad.
Well, the stock in focus is Campus Activewear, and what we are gathering from the dealers and our channel checks is that there is a buying coming in from certain domestic institutions. Now, roughly the volumes, if you look at it, has gone up almost 40 times its 20-day average, and today itself, almost 1.3% equity exchange hands. That's roughly 40.7 lakh shares. Now, the seller still remains unknown, and we would be getting the details to you. Apart from this, also importantly, the key DIs already invested in the company includes the names such as ABSL Mutual Fund and also Mirai Asset Mutual Fund. Now, there are certain key triggers for the company also, which is very important, and it's expected that the company might take price hikes going ahead. And of course, for the last 2 years, the company has not taken price hikes. The Q3 numbers were also very weak, and because of that, there was a significant corrections as well, and it is expected that there would be restriction of imports coming in from China as well. In that way, it would augur well for the footwear companies to increase their prices also, and importantly, the valuations are also trading at a discount of almost 20 to 30% to their 5-year average levels as per the analysts.
So That's the latest coming in from the footwear arena and how the dynamics are shaping up. But time now to take the BTSC trades from our chartist. Kunal, what's the BTSC trade?
So there are few names which have not buckled under the selling pressure in the last hour or so. So two buy calls over there. Havells is the first stock. It's still trading at its closer to the intraday highs around 1410, 1415 mark. So would suggest a buy with a target of 1440, stop us at 1390. And PI Industries is the other stock. In the last 3 days, it's managed to break past above its 200 moving average, gained up another 100 points further from those levels. Still looks attractive for another 100 points on the upside. 3800 as a target, stop us at 3630.
What about you, Naresh?
So first is a buy on JSW Steel, which has pulled back quite a bit after the morning move. Would keep a revised stop loss at 824 and a bounce back target of 850. Second is a buy on ICICI Bank, which has again pulled back to that 1050 mark. Could see follow up tomorrow. Stop loss at 1040, target price of 1075.
It's the day of the weekly options expiry for Bank Nifty, and it hasn't been a good close. There's a dip of almost, I think, 300, 400 points from the highs of the trading session. In fact, a bigger cut now. We're ending literally at the session's low for the Bank Nifty, just around that mark with a cut of around 200 points. But Nifty as well, let's see whether that one is ending at the lowest point of the trading session as well. Because, yes, so that index too is close to the lowest point. We're at least holding out to 22,000. Kunal, would it reverse your view in any case, or is there a mark either for Bank Nifty or Nifty which will tell you that there is breakdown, because Bank Nifty took the longest time to come out of consolidation?
Yeah, so I think the more simpler way to do it, Anisha, is to keep the critical moving averages for both the indices as key support. So as I was flagging off earlier, 21,700 approximately is where the 50 DMA is approximately for the Nifty. So that remains to be a first important support, which means another 1% broadly from current levels. For the Bank Nifty, that level is around 46,700 mark. So we are almost at 46,900 approximately for Bank Nifty, which means for to hold on.
Okay, so that's a take at the index level, but for some of these metal stocks, there are very heavy volumes and quite high delivery levels, at least the initial data that I have on my screen. SBI is the other one that's managed to buck the trend, so that's been one stock that has actually supported the bulls today. And of course, the other names from the banking arena as well, which is, I think, ICICI Bank was popping up. So ICICI Bank is in the green right now. Okay, actually in the red. Okay, in the last few minutes itself, it's in the red and is now at sessions low, and ditto is the case with Bank Nifty as well. Let's take it across to Winnie to get the closing picture for the markets today.
So absolutely, in terms of the Nifty, we saw a further sharper fall coming in the second half of the day, and that is why the Nifty seems like it's going to be closing in the red, down 0.7%. 22,000 is what it's managing to just grip onto. So yes, keeping an eye out on the Nifty. Sensex down more than 500 points at the end of the day, down 0.7% in trade as well. Bank Nifty too is seemed like a sharp seen a fall, and has maintain that fall that we saw coming in as of now in the last couple of hours of trade. Nifty Bank is also down almost 150 points in trade. Let's look at what the mid and small cap did, because they were clear underperformers today, and a sharper fall, intensified fall that came in from the mid cap space, down more than 1% as well, and small cap too down more than 1% as well. Advanced decline ratio clearly, like you can see on the screens as well, is in the favor of decline versus advances as well. What's managing to hold on to some bit of a green today? Look at that. That's the Nifty Realty Pack. So look at DLF, Godrej Properties managing to close on to the green as well, and Nifty Realty, the top sectoral index today. DLF up more than 2% as well. Godrej Properties up 1.5% as well. Other than that, PSU banks and metals, so JSW Steel, Tata Steel are the ones which managed to hold on to green, and ABB after their numbers has managed to hold on to some green, as well as Piramal Enterprises. But that's how the market roundup is looking like. Sharper fall we saw coming in the Nifty in the second half of the day.